you need to know in 6 minutes starts now.
Father didn't know best. I'm Dave Anthony, Fox News. The day after Travis Reinking was captured in some woods near the Waffle House, where he's accused of murdering 4 people in Tennessee. His father is also under scrutiny. Fox's Eben Brown has more on both live.
And Dave, Travis Reinking's father back in Tazewell County, Illinois, had agreed to take possession of and not return 4 firearms confiscated after Reinking was arrested trying to penetrate security at the White House last year. One of those 4 weapons was the AR-15 used at the Waffle House this weekend. Nashville police recovered 2 guns from his apartment, matching another 2 originally confiscated. Reinking was in possession of a loaded handgun when captured yesterday. That was the 4th gun originally confiscated. Now police say the father returned the guns to him, and he could face charges for that, Dave.
Evan, the man who drove a van onto a Toronto sidewalk, mowing pedestrians down, is due in court later this morning.
He just started hitting everybody, man. The bus stop, everything got shattered because a lot of people got hurt. I seen a scene I've never seen in my life.
Alec Manassian was later stopped and arrested. 10 people were killed, 15 injured. Police say it was deliberate. They are still investigating if he has any ties to terrorists. French President Macron goes to the White House again this morning for more meetings with President Trump, and the two will later hold a news conference. There will be a state dinner tonight. CIA Director Mike Pompeo could become Secretary of State within days. Some Democrats say they'll vote yes for his confirmation. A Senate committee narrowly approved him when Republican Rand Paul did a 180.
I have changed my mind. I've decided to go ahead and vote for Director Pompeo because he's assured me that he's learned the lesson.
That lesson? That the Iraq War was a mistake. There's a delay in the hearing to consider Ronnie Jackson for Veterans Affairs Secretary to look into misconduct allegations. He's the president's doctor at the White House. Fox News. Fair and balanced.
Let's see here. Fire protection?
Check.
Uniforms, mats, and restroom products?
Check.
First aid cabinets and safety products?
Check.
Great! So it sounds like we're ready to go.
No. When I said check, I meant we still need to check on all those things.
Oh, just call Cintas. They can handle all of it. It's what they do.
Okay. Call Cintas. Check. I mean, got it.
Oh, I'm ready!
Learn how Cintas can help you get ready for the workday. Visit Cintas.com.
Ready for a new tractor? At LS Tractor, we'll be the first to tell you to shop and compare. That's right, shop our competition. We're that confident that the LS Tractor combination of more standard features, better performance, competitive price, and proven commitment to customer satisfaction deliver value that's unequaled by another tractor. Period. Want more tractor for your money? Look around. You'll see there's one that gives it to you. LS Tractor. Excel in your field. Learn more at lstractorusa.com.
Police in Canada's biggest city are piecing together witness accounts and surveillance video, trying to determine why a driver plowed a rental van along a crowded sidewalk, killing 10 and injuring 15. The suspect is in custody. Officials are downplaying a link to terrorism. The 2016 law signed by Governor Christie that raised the gas tax also cut the sales tax and says if the sales tax goes back up, the gas tax goes back down. But Governor Murphy says he has no intention of adhering to that as part of his plan to raise the sales tax.
The sales tax was reduced as a gimmick, just so that he could say that he didn't raise taxes in the aggregate. It wasn't reduced for any good public policy reason.
The gas tax hike created a 3-member review council supposed to certify whether any tax reductions are reversed, but even if that council isn't written out of state law, it may simply never meet. The 3rd member was never appointed. Atlantic City's Ocean Resort Casino bringing virtual golf to the resort's boardwalk. The former Revel property, due to reopen this summer, says it'll offer the world's largest top golf swing suite. Ocean Resort rolling out its offerings as it gets ready to reopen. I'm Eric Scott. This is the Town Square News Network.
If you ever want to buy a house or a car, you're going to want to know your credit score. If there's a mistake on your credit report, you could pay more in interest rates and fees than you have to. Where can you go online to quickly get your credit score and credit report for free? CreditKarma.com/radio. Check it whenever you like. It's free and there's no catch. Don't get an unwanted surprise about your credit score. Go to CreditKarma.com/radio. That's creditkarma.com/radio.
Some wet weather ahead for New Jersey, but at least that rain will wash away a lot of the pollen in the air right now. Mostly cloudy and breezy today. We'll fare okay, with an increasing chance for showers as the day presses on. Highs mostly in the lower 60s. Tonight looks wet, periods of steady or heavy rain likely, and that'll wrap up tomorrow morning. Showers tomorrow afternoon. Franklin Mutual Insurance makes choosing home insurance easy. FMI delivers the most appropriate coverage for the way you live simple. Find an agent near you at fmiweb.com. Franklin Mutual Insurance for the way you live. I'm meteorologist Dan Zero.
From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on Wpgg Talk Radio 104.1.
Thank you very much. 5 minutes past the hour. Chuck Malamut is here. It's our weekly program all about your financial matters, starring Chuck Malamut in his 27th year on our program, and he is the official financial advisor for the Hurley in the Morning program, actually the first client in the history of this broadcast. Chuck is the managing director, leads his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office, 609-383-2010, the phone number to reach Chuck. The following program is presented, sponsored by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Congratulations to Chuck Malamut for his selection of the annual Barron's. That's the Dow Jones Industrial Business and Financial Weekly publication, their power list of America's top 1,200 financial advisors. And also, Chuck has been selected as a member of Forbes' Best Wealth Advisors. That's another national acknowledgement. They select the 2,000 best wealth advisors in all of America. Chuck is number 25 in the state of New Jersey and in the top 2,000 in the entire country. And he's a benevolent good brother because he has yielded the floor for whatever time the distinguished gentleman from both Atlantic City and Absecon shall consume. Kirk Conover is going to promote a very important upcoming charitable event. Kirk.
Yes, the Absecon Presbyterian Church is having their 7th annual golf outing at Harbor Pines Golf Club on May 20th. 12 o'clock registration, 1 o'clock start. We're looking for men and women to golf, and it's $125 per golfer, and that includes all your greens fees. You get a hot dog lunch and then dinner afterwards. And at the dinner, you can also come just to the dinner if you'd like. We're going to have entertainment by the multi-talented music director of the Absecon Presbyterian Church, Rick Tokarski, and he is a world-class musician. So not only are we going to have great golf, but we're going to have great fellowship at the dinner. Harbor Pines is a great venue, and the money raised is used for our mission work with the church, and we have, we take seriously our command that we should help those less fortunate. So I would encourage anyone that wants to play golf, attend the dinner, be a part of this great event. They can call me at the Shore Agency, 641-0625. Send me an email, kconover@shoreagency.com. Like I said, we're looking for golfers. There's also opportunities for hole sponsors. It's $100 to sponsor a hole. Have your sign. We had a lot of holes with 2 and 3 sponsors last year. It was very successful. And we also, as the Absecon Presbyterian Church, would like to thank the Mayor of the Morning for doubling his contribution to our great event. Thank you very much, Harry. And thank you, Chuck, for the time. Absecon Presbyterian Church, 7th Annual Golf Outing, May 20th, Harbor Pines.
All the best, my friend.
Thank you.
Thank you, Kirk. Ladies and gentlemen, enter to the scene the official financial advisor for the Hurley in the Morning program, the Honorable Chuck Malamut. And I say we have a very ambitious agenda for this morning's program. Chuck's market update, trade tensions, how do they stand? Are they building? Are they fading? First quarter earnings, inflation and financial markets, interest rates on the rise. Can the market move higher? What does April mean for the equity markets? Who pays income taxes? Credit card debt on the rise, China trade war, and U.S. debt, natural disasters, just to name a few. We have an ambitious time ahead, Chuck. Time is yours.
Good morning, Harry.
Thanks for helping Kirk and Nancy.
Well, absolutely. I mean, Kirk is such a good fellow. We're going to go ahead and sponsor a whole. Won't let him get out of the building.
It just got better.
So
that's fantastic, Chuck. You're the best.
So maybe we take it, Harry. Can we take our first break real quick?
Yeah, we'll take the break and you'll write the check.
I'm going to do that.
Oh, man.
All right.
Kirk, this is incredible, man. You're leaving with checks. We'll be back. Chuck Malamut continues. A reminder for all of your financial planning needs, turn to the official lead counsel and the official financial advisor for the Hurley in the Morning program, Chuck Malamut, the Malamut Group at Morgan Stanley, 609-383-2010. That's 609-383-2010. We'll be back in just a few minutes.
When you need to know, make the switch to WPG Talk Radio 104.1 and WPGTalkRadio.com. Only one South Jersey radio station brings you breaking news online, on Facebook and Twitter, 24/7. Fox News Alerts.
This is a Fox News Alert.
South Jersey traffic updates.
Looking good on the White Horse and Black Horse bikes.
And more. Set the first button on your car radio for WPG Talk Radio 104.1. South Jersey's talk station.
Health Update brought to you by the law offices of Richard A. Stoloff, New Jersey and Pennsylvania.
If you're a runner, you might have wondered about the difference between running on a treadmill and running outside. According to research, in 2016, 52 million people in our country used a treadmill at home or in the gym, and that means they actually used it for something other than a clothes rack, as many people do. Research shows that running on a treadmill is actually easier than running outdoors because a treadmill belt assists leg turnover, which helps us to run faster. Plus, the base of the treadmill is softer than a hard road surface, and that makes it easier on our body. Running on a treadmill can be a great way to enhance speed and technique, and running outdoors is better for building stamina and getting fresh air. Either way, as long as it doesn't create pain or injury, running is an excellent exercise. I'm Robin Stoloff for Health Update.
Brought to you by the law offices of Richard A. Stoloff, StoloffInjuryLaw.com. Attention you expect, results you deserve.
At Seacrest Village, they understand that families need a break from the daily responsibilities of taking care of a loved one. Whether you're going on vacation, want to take care of personal business, or just need some quality time with your family, Seacrest Village has the facilities to assist you. In addition to featuring a knowledgeable and caring staff, they have long been the leader in delivering quality, long-term subacute and memory care. So rest assured, you know your family member is in compassionate and skilled hands. It's all part of making your loved one as safe and comfortable as possible. And respite residents receive the same services available to their full-time residents. Seacrest Village in Little Lake Harbor Township. Call for special rates and more information about respite care at 609-296-9292. That's 609-296-9292. Or visit SeacrestVillageNJ.com. It's worth the visit and closer than you think.
Hey, just ask your delivery guy. Or the guy who built your delivery guy's house. Or the guy who laid the highway for the guy who built your delivery guy's house. Ford Commercial Vehicles can handle the job. During commercial vehicle season, save on Transit, Transit Connect, E-Series, Super Duty, and Medium Duty trucks. Ford Trucks and Vans. Year after year, America's best-selling line of commercial vehicles because they're built Ford tough.
Claim based on IHS market calendar year 1985 through 2017. U.S. tip registrations excluding registrations to individuals. See your dealer for details.
I'm having that 6:59 feeling again.
What?
You know, that mini panic attack right before the workday starts when you're sure you've forgotten something?
Nope, that's my favorite time of day. I work with Cintas, so I always know we're ready for the workday. They handle our uniforms, fire extinguishers, first aid, safety training, floor mats, and restroom supplies.
I think I need to call Cintas.
They might just make a morning person out of you.
Oh, I'm ready.
Learn how Cintas can help you get ready for the workday. Visit Cintas.com.
Diabetes, high blood pressure, anxiety meds, everyone's on them. If you're a 50-year-old male, maybe a bit porky, and you may even have type 2 diabetes, $1 million of term insurance may only cost you about $200 a month. Call Term Provider. Speak with Big Lou at 800-555-2085. Big Lou will find a term life policy for you even if you have type 2 diabetes, are overweight, or have high blood pressure. Term Provider has helped thousands of people like you who think they can't afford term life insurance. To buy $1 million of affordable term life for you, all you need to do is call Big Lou at 800-555-2085. Lou will make sure the scales are tipped in your favor. Call 800-555-2085. Big Lou will answer your call and work to fit you into a term life policy that you can afford. Remember, Big Lou's like you. He's on meds too. Call 800-555-2085. 800-555-2085.
In an earlier commercial, Big Lou, he's like you, he's on wife number 2. It's in the commercial. I'm not making it up. This portion of Hurley in the Morning also brought to us in part by ANS Construction, paving the way to the future of Atlantic City, Atlantic County, and beyond. They specialize in parking lot repairs, the Hurley in the Morning official company in this regard. They expertly handle pothole patching, seal coating, line striping, as well as complete overlays. They stand behind their work. They stand behind their products. Their Sealmaster Ultra, it's the standard. They use the best top-of-the-line paint machine, which dispenses only Sherwin-Williams line striping paint. They'll work with your budget, both large and small. If your parking lot is in bad shape and you don't want to or you can't afford at this time to spend the money on a full overlay, ask Adam Polino, the entire team at ANS Construction, how they can help you. 609-246-0023. Please tell them that I, Hurley in the Morning, sent you. 609-246-0023. Chuck, I want you to know you not only did what you did, which was beautiful, and sponsored the hole. Ron Meischker reached out during the break, and he's sponsoring a hole as well, and that just helped Kirk, Nancy, and all the great folks at the Wpgg Presbyterian Church have an even more successful charity event because they help a lot of good people with that.
They do, and we got we love Kirk, so
yeah, that was nice.
Anything to help.
You're the best.
My pleasure. So Harry, one of the things we said a couple of weeks ago, we were wishing time away and couldn't get to this moment.
First quarter earnings.
Couldn't get to this moment fast enough. So let's kind of take a step back and just briefly look at what happened last week. There were sort of those big picture risks that we are continually look at. Economic growth data, inflation. What's coming out of the political scene. I guess the best word to describe that is turmoil, geopolitical issues, not only here but overseas as well, and then trade. Because as you know, trade took center stage for it seemed like forever, but it was only just for a couple weeks. Now the good news is that investors are now focusing on what we thought was very important, really the most important issue at hand, and that was first quarter earnings. Now, there were, I think, 6 Dow components today, I take that back. There were 6 S&P companies that I'm aware of today that are coming, maybe even more. And what is happening now is the earnings results, have started out, in a really, really good note. I mean, stronger than expectations. So, early on in the week, the markets ended up moving higher in valuation. And as we got to the end of the week, we had somewhat of a sell-off Thursday and Friday. So we did make a positive move for the week. We were up, 0.5%. Energy, industrials, led the way. Consumer staples and technology lagged a little bit. Now, that was through Friday. Now, as you know, in our world, things change very, very quickly. I mean, there was a big tech company at the close yesterday that announced some. We use their browsers oftentimes, and as a result, that stock moved up, moved down, moved up. But now we look at where we are today. The indices, are all very, very positive. Now, the one thing that we have to think about, and sort of the boogeyman in the room here, is what's happening with yields. we got very, very close to 3% on the 10-year Treasury, and we moved fairly quickly to get to that number. 2.997. I mean, we just, you couldn't pierce that number, and that's more. I think, Harry, that's more of a psychological number. We oftentimes, and you oftentimes ask, well, the Dow hits a record, or we're now, whatever the number may be, does that have an impact with the markets? And while we think rising rates, are going to cut into earnings, we don't think they're going to be terribly detrimental, as we go out over the next 6 months or the year. So I think the fact is that, corporate earnings, continue, to improve pretty significantly. If you take a look at the companies that have reported so far, 20% of the companies, Harry, as of last Friday had reported, 81% have exceeded expectations by an average of 6.4%. 81%. Now, I don't think we've ever seen a number that high. The average beat over the last 3 years has been about 4.7%. So
and these are typically top and bottom line.
Yeah.
beats.
So now we go from an average beat of 4.7 to an average beat of 6.4. So that shows the strength, that we had in the first quarter. Now, a lot of that strength, and I think you have to, I think what your listeners need to be made aware of, it's earnings are great. Yes, absolutely. But think about what happened as we got to the end of the year with the implementation of the new tax laws. How, we kind of railed on, how it being somewhat disingenuous and unfair to a lot of residents of the state of New Jersey, but for corporations, this has been somewhat of a windfall. So we think that earnings per share, Harry, are on track to grow by about 23%. But if you factored out what is happening with the tax law changes, that would be decreased to roughly 16%. Still not a bad beat, that's for sure. But the market is, sort of vacillating, and found this home, I guess is the best way to call it, where we're pretty range bound with respect to the way the market's been trading. For the last several days, it seems as if the big word in the room, volatility, had subsided somewhat, and we think a lot of that, Harry, is that if you think about, we're now focused on earnings, and the market is looking at individual companies and sectors and rewarding or penalizing them, based upon performance first for the first quarter, and then expectations as you move through the rest of the year. So we've seen a few circumstances, and 10 times, Harry, where first quarter earnings beat top and bottom line, but the company came out and said, we're not so sure about the remainder of the year. And as a result, the company just absolutely, and I don't want to say got demolished. I think that's somewhat of a misstatement.
So they actually had good news going on, but they couldn't guarantee it for the whole year.
The expectation is that, moving forward, quarters 2, 3, and 4, that we're not going to perform as we did in the first quarter, and we're somewhat concerned for the rest of the year.
So they got punished.
Yeah, when that statement is made during the conference call, you can just see those stocks trade, and it just they take the stocks out.
I'm a big believer, Chuck. I'm a big believer in transparency, and I know publicly traded companies have an obligation to be honest and so forth to the public and to their shareholders. That's got to be a painful thing to say in the midst of good news, though, that you don't expect. So they obviously know something.
Well, they spend a lot of money understanding and forecasting, and how things, how revenue trends in a respective organization. In addition, they have, they look at expenses. Think about, and you and Kirk talked about this, and you and I talked about this before, and it's sort of gone unnoticed, and it's the price of fuel.
Yes.
And the price of fuel is a very, very important component, to make, to companies so they can make their goods and services and perform. So if you take a look at, At West Texas, crude, it went out on Friday at $68.37. A year ago, it was $50. The price at the pump, while not as significant as an increase, now $2.75 nationally.
We're fortunate they're not passing on more of it than I always thought they passed a lot more on than they're doing at this time.
Well, Harry, you might want to take that back a little bit because while the price at the pump is up about 13%, and we're now in April, I'd be real curious what the price of the pump is going to be as you get into your peak driving seasons, which is typically
so in other words,
late spring, early summer.
It's premature to say what I said because it's probably going to catch up.
I think it's going to catch up a little bit. I mean, the price of West Texas up about 36% year over year. The price of the pump up about 13%. I think that gap's going to narrow somewhat, and I think two things are going to happen. I mean, the price. Where does crude go from here? And the energy companies have benefited by obviously stronger and higher oil prices.
If every penny at the pump equates to $1.3 billion or whatever that number is, could this put the brakes on a beautiful economy?
I think there's a lot of things that could impact the economy here, and the price at the pump, yes, is one. The fact that we've talked about how tight the labor market is, the fact that we're seeing wage growth, and I mean wage growth is a good thing for all of us that are working. Wage growth is not particularly good when it comes to the consumer on the flip side that's buying those products and services. So, and then the big word in the room, Harry, begins with I. As all this is happening, think about the 10-year Treasury at 3%, maybe going higher, oil prices moving higher, wages moving higher. It all equates to potentially higher inflation.
Wow. Chuck, let's I know you're on a roll. Let's get our break in. We've got a lot more to cover in terms of can the market move higher, all the other things I mentioned in the beginning of Chuck's program. What does April mean for the equity markets? Who pays income taxes? Credit card debt? Is it on the rise, Chuck? China, trade war, the U.S. debt, natural disasters on the rise. And I want to send a shout-out to John Zarek, who also just sponsored a hole for the upcoming Wpgg Presbyterian Church charity golf tournament. So that's 3 hole sponsors just during this segment. We'll be right back in here's the good news. Chuck, here's the good news. Chris Coleman told me this yesterday. We got all our breaks in because we took the one early. We're going to go until the top of the hour, until when you have to leave, with no additional breaks. John, I'm going to send you the number that I promised in just a second. Chuck, we're not going to go step aside for break because we already did it. And did we cover interest rates? I know that.
Well, let me go back here for a second because we're chatting about potentially inflation.
Yeah.
So, rising inflation does represent somewhat of a risk for financial markets. So, as we mentioned before, the Fed is looking at that target rate of 2%. And we seem to think that they're going to get there before the end of the year. Now, while the increase might be somewhat gradual, Harry, higher inflation is, will contribute, to the market volatility that we've seen. And you think about it, up until middle of last week, we had seen, pretty significant price swings in the market. And as we got to the end of the week and yesterday in particular, that wasn't happening. We were now focused on earnings and less focused on the news of the day. So we do think that if inflation does happen, it's going to create some volatility in the equity markets, and at the same time, it's going to put some downward pressure on the bond markets. And if you think about if you've owned bonds, you've clipped your coupon, over the course of time, which is a good thing, but you haven't seen any price appreciation in that asset, and actually the opposite has happened. You've seen price depreciation over the last 12 to 18 months. So we're concerned that the bond markets might take it a little bit on the chin. But equity, Harry, we don't think we're at the end here of the equity markets. We think we've got a long way to go here.
Very, very interesting. I want to make sure that I'm not repeating a question because I know you've covered a lot of ground. Before we get further on to the market moving higher, was there anything in the first part of your agenda that you didn't get to cover?
Well, we talked about inflation, and we'll kind of segue that into potentially higher yields, with respect to the bond market. So you think about it, in the equity markets, we had a pretty impressive rally, Harry. In the last several weeks now, we're up about 5%, and we've narrowed that gap from that January 26th is when we hit that high for the year.
Yep.
Then sold off in February, March. April looks to be a pretty good month. And I'm going to cover historically what happens with that. The 10-year Treasuries we talked about, which is pushing 3, the highest level we've seen since 2014. The 2 years are the 246, highest level since 2008. So Harry, think about this for a second. 296 on the 10-year. 246, and these numbers are a little dated, slightly, but let's use this. 296 on the 10-year, 246 on the 2-year, 50 basis point differential. Yield curve, increased rates on the Fed's going to come back 2 times, 3 times maybe, Fed fund money. So now your yield curve looks to be rather flattish, we'll call it. And the next,
but we don't want inverted yield curve, Chuck, because that is the dreaded R word. I'm a good pupil of the school of Malamut.
The one thing we got to remember, we talked about inflation. Potentially, we have higher yields that are coming, and that could complicate, what is happening, with respect to the investing landscape. So it's just, you think about, we are navigating through a lot of situations here, but the way I look at it, Harry, it's all market driven. It is not driven from the rumor of the day or someone out there floating something coming out of Washington.
So then when the fundamentals are strong and it's not any of that kind of stuff, that's a good thing.
Yeah, because you think about this for a second. We just kind of glossed over trade or trade issues. So the risks have faded somewhat, but I mean, obviously it still remains a threat. So you think about it, NAFTA, tariffs on steel, tariffs on aluminum, relationships between the U.S., and China, obviously they're a source of concern as we move into the future, but we think that there will be some kind of agreement, negotiation, settlement, we'll call it, any of the above, between Washington and Beijing. And that will obviously avoid this escalating war of potentially more tariffs and punitive actions. But again, the only thing you got to remember, Harry, it's still uncertain. It's not a guarantee. So there's a little bit of overhang in the market with that, but not like it was, say, 2-3 weeks ago. Because you think about what were we talking about 2 or 3 weeks ago with respect to company earnings? Nothing.
No, we were hopeful, though, that they would be good. I don't know that anybody could have predicted 81% plus would be beating both top and bottom line. And that it really, as far as you know, in your entire career, that's as high as it's ever been, isn't it?
It has, and I think the problem is we always talked about, can companies, increase, can you raise the bar? Can the companies get over that bar? So you think about the last 6 years, earnings have improved. Price earnings ratios, as we know them, they have also moved higher. But this year, we think earnings will continue to rise. Valuations probably remain flattish as we get through the year. So rising profits and earnings are going to be needed for stock prices to move higher. So it's sort of a complicated formula, but it's like anything else. If you are, if you have the proper diversification within your portfolio, and you're not focused on one particular sector or a number of stocks within a particular sector, chances are you should do relatively well. And I'm pretty convinced, Harry, that our chief strategist, Mike Wilson, calls out for an S&P to be around 3,000 before 2,950, 3,000 by the summertime, and then you're going to back off somewhat.
So this answers the question: can the market move higher?
Yeah, I mean, the market can move higher. I think what we have to be concerned about again, we're sort of range bound here, and it's a wide range. It's not tight like we've seen in 2017. We have to be obviously concerned about who's winning the battle here. Is it the bond market or is it the stock market? We talked about the spread differentials between overnight money and the 2 and the 10-year, and the curve being flat and the curve being somewhat inverted. But I think for now, Harry, the tailwinds with respect to stocks look a lot stronger than the headwinds. But you have these downside risks that we kind of chatted about, and I think it's something that we need to be somewhat cautious about and concerned because investors, you need to be tactical here. You need to be able to make changes on an as-needed basis. And I'm not suggesting that you flip your account or your portfolio upside down, Harry, but what I'm suggesting is you clearly understand what you own and why you own that. And oftentimes we talk with prospective clients and we review their holdings before they transfer in, and we say, well, why do you own this position? And oftentimes we get, well, I don't know.
They don't even know.
So, and I would think if I kind of polled your listeners, you might get the same answer. I mean, they know why they own the S&P 500.
Probably trust. Somebody put them in it, and they trusted it. What's interesting about this is the first quarter's over. We're nearing the end of the first month, so 1/3 of the second quarter is almost in the rearview mirror. Hard to believe. 2018, I think you'll agree, Chuck, is just flying by. It's crazy.
Yeah, actually, I woke
Can't
up.
Believe it.
I woke up this morning, Harry. I kind of get off track here a little bit, and I said, and I swear I woke up and I said to Pam, "It's Saturday," and she goes, "Chuck, it's Tuesday." Like, what are you doing?
Close enough.
She goes, "You're not even close."
I don't see any difference.
So yes, the time is flying by.
Saturday, Tuesday, because you work every day. It's every day's the same day. What does April mean for
Harry,
the equity market?
This is, I think, as you know, we spend a lot of time doing our show prep.
Yes,
and
you do.
And want to be able to deliver information to your listeners that one, easy to listen to, and give them some actual items to think about. So when we look at the S&P, on the total return in months of February, March, obviously, we were down. And when you go back historically over the last 3 decades, we've only had 3 or more consecutive down months 3 times in the last decade.
Wow.
So February's down, March is down. So not that I'm suggesting that you make a bet on this, but think about, if historical norms prevail. And it looks like, and obviously, yes, we're approaching, we're 3rd week of April. When we are viewing client accounts, they are positive for the month. So I'm hoping that this little tidbit of information I'm delivering to you and to your listeners, holds up, and we don't end up with 3 down months. I don't think it's going to happen here, at least historically.
I like the detail that you shared with that. Who pays income taxes?
Well, Harry, I don't think I'm going to tell you anything you don't know. And it was very interesting listening to you and Kirk and Bob and a number of people that called in and sort of railing on New Jersey and the fact that we've had not only a financial drain, but we've had a brain drain.
Well, it's also disconcerting, Chuck, when the gas tax is raised while the price is low, and we all know that the pendulum swings up and down, that they would go back up at some point, and they now have. But the offset was that the sales tax would decrease, and now the new governor says, no, we're not doing that, and he wants to increase it on top of it. To me, that's dirty.
It is, and
it's terrible.
It makes it very difficult to do business here in the state, but. So the question was who pays taxes?
Yeah,
and I think that in 2015, it was the last time this was reported. I guess we'll get 16 numbers fairly soon. There were 141 million tax returns filed. First and foremost, the top 5% of U.S. taxpayers, based on adjusted gross income, paid more federal income tax. That was $866 billion during that tax year 2015 than the bottom 95% of the taxpayers that were filing. So think about this, Harry. Oftentimes, the highest taxpayers get railed about making too much money, not being charitable or whatever it may be, or a combination thereof. But they're carrying the load here. 5% paid more taxes than the remaining 95%, which is, they paid. The 5% paid $866 billion. The remaining 95% paid $588 billion. That's a pretty big spread there. 866 to 588.
It's amazing.
And 5% are driving that. And the end of the day, we don't want to. We want these people. We want the 5% to obviously continue to pay. And I think Kirk said it, or you said it last hour, that what was Ronald Reagan's quote, that increase, we can always find a way to spend that revenue, or I can't remember exactly how he said that, but it was exceptional, and it's so true.
Yeah,
it is so true.
There's no doubt about it. And also too, though, is it becomes problematic though, because when such a small percentage carries a lion's share of the load, they're all in positions to make certain changes that can adversely affect when you count too disproportionately on such a small percentage. And then, of course, you could also word it another way. I think the number now is slightly more than half, or almost half. Half the country basically pays no taxes.
And what percentage of that half actually get a refund?
Exactly.
Well, no. Well, if they don't pay any taxes, then it's net zero.
Believe it or not, though, there was a report, and it's mind-blowing, that you can pay no taxes and still get a refund. I know that your head wants to explode, because nothing from nothing should leave nothing. But we're talking negative at that point. So that is a dynamic question. It sounds simple. Who pays the income taxes? Now you know. This also is an issue, because obviously if interest rates go up, it becomes even more challenging to pay back and so on. And people that are paying minimums that can't get into the principal. Credit card debt, is it on the rise?
Yeah, Harry, you think about when you get home at night, and I know that a lot of us take a lot of our mail electronically, but we still get, physical mail to us. And if you go through the mail that you receive, oftentimes you get a number of solicitations from banks, credit card companies looking to entice you, to open an account or move your account, or a combination thereof. But, believe it or not, at the end of February, there was 1.03 trillion, not one. I mean, Harry, that's $1 trillion of credit card debt, and that is the highest level that we have ever seen. Prior to that, in May of 2008, and think about the time.
So the government's running on a credit card now. Individuals are running on a credit card, and we have more than $1 trillion something in school debt. More than $1 trillion three in credit card debt. We're talking about these are bad issues.
Well, think about, the prior number of 1.02 trillion. So it's like splitting hairs here.
Okay.
But I think what's important to recognize is the fact that number was established, was reported in May of 2008. May of 2008, February 2018, we know what happened after May 2008.
Yeah, now, we don't want to remember that.
So it's just something, and I'm not
Yeah, you're
I'm not trying to connect the dots. That's not what I'm trying to do here today. I'm just merely trying to, we talked about.
But people should pay attention to things because we were in a position where then people's credit limits got lowered, credit card accounts got closed, and all you had left now was whatever you had to pay back. Now you're just paying an account back that you don't even have the use of. These are things we don't want to repeat, Chuck.
No, and we certainly don't. But I think that you mentioned it a few minutes ago. We've mentioned it on previous shows. The debt that's incurred with college loans, the debt that's now incurred on credit cards. It's, I don't want to say. I think we just have to be very, very careful, and it's, your listeners need to be astute and need to make certain that they plan, that they have a budget, that they understand what their spending abilities are, so they don't get themselves trapped in a situation that becomes very, very difficult to get out of.
And if we got into, and this is hypothetical, and I don't want it to be true, but if we got into an environment where they're lowering your credit limits, say you've been responsibly managing credits that you stay somewhere 20% or below in terms of debt to equity ratio, if they take your $20,000 credit card and just say you have $2,000 on it, so there you think, oh, I'm doing great. $2,000 on a $20,000 credit card, I'm 10%. If all of a sudden they lower your credit limit to $10,000, your whole credit score will change because more than 1/3 of your credit score is your debt to equity. And if you were really doing a good job keeping credit card balances at a certain point, if they lower your limit of your credit line, all of a sudden you might be at 50%, 60%, where you were at 20%.
And don't forget the fact that when things got bad at the height of the Great Recession, that a lot of lenders, individuals that had the home equity lines or the HELOCs, were basically locked down.
Yeah.
There's a provision in those loans to say, one, we're either going to we're going to decrease your maximum availability, and or we're going to freeze what you can withdraw from your HELOC, for whatever purposes may be. So, and again, I'm kind of thinking out loud here, Harry, that we're delivering some things here today that we're not trying to scare your listeners.
No.
By any way, shape, or form. But I think we're just, as you said, we're just trying to effectively educate them as to potential pitfalls, kind of like the potholes.
And A&S, thank you. And it also speaks well to what you were talking about earlier in terms of credit card debt on the rise. Anything that people can do to pay those balances down really serves you well. Because if you're making big interest payments and getting nowhere, that debt is staying, and you're just making minimum monthly payments.
Yeah, and and obviously that's going to catch up to you. There's no doubt about it. But you're talking, you kind of segue into the next point we're going to kind of chat about, and that's sort of that, who owns our debt at this point in time, and what could potentially happen. As we look to maybe I don't think it's going to happen, but we kind of chatted about it. But we never want to forget about potentially a trade war. So, at the end of last year, the Chinese government owned 1.18 trillion of our debt. That's Treasury bills, Treasury bonds, Treasury notes, and that was 8% of the 14.5 trillion of outstanding U.S. debt that was on the books at the end of 2017. So I guess the question is, if we ended up in a trade war, what would the Chinese do with that 1.18 trillion of debt that they hold on our country?
If they ever wanted to, they could put the squeeze on us, couldn't they?
They could. So think about this for a second. If they push through, the market, whether it's a stock market or the bond market, for a trade to happen, and it's a little bit more opaque in the fixed income world because you don't see it like you do with equities. But for a transaction to occur, you have to match a buyer to seller. So if they came to the market and say, "Oh, we own 8% of your debt, and we don't want to own it anymore.
Is there anything to be said for? I mean, we can't change this because it is what it is, but I don't think that was such a great idea to get more than $1 trillion in debt to the Chinese.
Well, Harry, look.
They always want to be the big dog. They want to supplant America as the world's biggest economy, the world's superpower if they can, and they could really leverage us if they wanted to. I'm surprised, actually, with all the tough trade talk, that China has been as disciplined as they've been.
But think about before you mentioned that. What I was trying to say was you have to match a buyer to a seller. So if you came to the market with 8% of the outstanding issue, in this case debt, U.S. debt, and you said, look, I just sell it. I don't want to be here anymore. Well, you don't have – a couple of things happen. All the buyers see that, and they kind of obviously get somewhat – concerned, upset, dismayed, all the above. One, they might not effectuate that trade, and two, they might just walk away. So, I mean, I don't think the Chinese government or Harry Hurley as an individual investor is going to, they're going to be astute enough and say, well, wait a minute, this trade doesn't make sense. I'm not going to take a 10% haircut just because I want to get out of this.
Right.
So I think there would be some kind of method. I'm sure there is a methodology that they would put in place in order to get out of that debt on a timely basis and on a cost-effective basis. But remembering, where do they go with the money? End of the day, even though our credit rating, was we went from a AAA to a AA by, I think it was Moody or S&P or whatever. I mean, who else in the world has the same credit worthiness that we have in the United States?
Has America always been AAA until then?
It was.
Yeah.
Yes.
It's very hard to take. Some of this is very, very hard to take, and we got to get a handle. We don't talk about it much on your show. It's not like we avoid it. It just isn't in the vernacular of the market update and all the different quarterly earnings and all the things we talk about. But this debt issue in our country, I mean, this country is so many 20-plus trillion in debt. Numbers that I've read and prepped to talk about over the years, Chuck, said that 24 million or trillion rather, and we're insolvent. I mean, this is getting, I think, something we've got to deal with.
I think what's very discouraging, disheartening, Harry, is when you and I haven't seen. You probably have it on your phone, some app that it's that clock.
Oh, it's horrible.
It just you can't. It moves so quickly. You can't even focus on it. It's and the fact of the matter is, we are now dependent upon other countries for our well-being. So that's something that we have to be concerned about.
And the scary thing about that is it was never that way. The last thing I see is 21 trillion, 89 billion, 642 million, 954,196 dollars, and
well, you can't get the dollars out fast. You can't get the last. No. You can't get the 96 out fast enough.
I know
because
it's just look at the thing.
It's absolutely crazy. But the last thing I wanted to touch on, Harry, was you think about all the disasters that we've had that are weather related in our country, and it just seemed like in the past, in 2017. We had $16 billion weather and fire disasters that caused damage in excess of $300 billion. $300 billion, Harry. Now, the disasters that we had last year actually were, tied the record that was set in 2011 for the most number of billion-dollar disasters, and the $309 billion topped the previous number of $219 billion. Ooh. So those numbers are adjusted for inflation, but I think what we have to be concerned about is, again, what is our cost as a consumer, and this is right in Kirk's wheelhouse, for insurance. I mean, the insurance companies are there to make money. It's obvious. But, you think about they have to build all of that into their formulas to do the calculations to clearly understand what level set the premium so it's neutral or profitable to the insurance company.
Chuck, I know you're on overtime, but make a brief comment on the natural disasters or on the rise. And
that's we just we just kind of I don't think they're on the rise. I think we're kind of set.
I got you.
I
was adding to it if you thought they were on the rise.
Right.
They're not on the rise. Seems like
they are. I mean, we like I said, we had $16 billion events last year. We had 16 back in 2011, but the dollar differential is pretty significant. 309 to billion to 219 billion. So again, I'm sensing that today. I don't sound like Debbie Downer. That's not the case at all.
I think it's
here.
just a sobering assessment of where we are in the midst of everything you've said this morning. You talked about 81% plus in terms of companies meeting both top and bottom line earnings. I mean, there's been a lot of positives, but there's just been a lot of, I think, sobering assessment of what some of these things in the past have meant if we see them. I mean, if, like you had said earlier, if we got to the point that there was an inverted yield curve, that typically speaks the dreaded R word. It just does.
Yes, that's correct. And
but we're not looking for that.
But the good news is, I mean, that's that is a forecast, not necessarily a reality.
Correct.
And the fact of the matter, Harry, is that we haven't gotten near zero. You think about GDP. I think it's if anything, it's been consistent. It's been consistently increasing over the last 12 to 18 months. So sometimes when you look at history, I think it's a good lesson, but it's not necessarily always going to work out that way.
For an example here, a good friend Bob writes in that may be a bad hurricane year for New Jersey. I've heard that too. They rate what they think it would be a normal, typical, so many, or a bad year. And obviously, hurricanes are horrible because if they're in the Gulf states, they can interrupt gas flow and supply, and very, very important to follow that kind of thing. Sometimes you get lucky that some of these storms just stay out on the ocean and don't become a factor. Chuck, very informative program, and I don't think you were a downer at all. I think it was intellectually honest at such an important level for people to assess where they are, what they're doing, and we encourage people to call Chuck for your financial planning needs at 609-383-2010.
Harry, thanks for having me.
Very good.
See you again next week.
Good stuff. We're going to go right to the top of the hour. John Zarek is going to give us a quick call. He wanted to react to Chuck's program. And a reminder, Chuck Malamut, the exclusive financial advisor for the Hurley in the Morning program, 609-383-2010. A reminder, Dr. Newkirk is in surgery this hour into next hour, so he's unable to do his program this morning. So we have a bonus wide open forum hour, and we're going to have Dr. Newkirk either at the end of this week or beginning of next week. He'll make up for today's miss. If you go to WPGTalkRadio.com, I think this is an excellent poll question. And I'm going to give you – don't be guided accordingly by my answer, but my answer is easy to me. The question in our politically correct times, our question and how it relates to that, should South Jersey schools ban the phrase best friends? ? Do you think that could possibly, I know we're in this, everybody gets the certificate of attendance. You can't have valedictorians anymore. You can't have salutatoriums. And John, the music's going to play us out. If your busy schedule permits, I'd love you to open up the 9 o'clock hour if you can hang in there just for the Fox News break, because literally in 5 seconds, you're going to hear the music, and it would be time for me to say, hey, John, how you doing? Hey, bye, John. See you after news. So hopefully John can hold. I'll negotiate with him. He negotiates tough, but he's fair. I can always take a tough negotiator when they're a fair negotiator. So we'll see if Zarek can stay. But this question, it sounds kind of flowery or froofy, whatever you want to call it, but it really is in keeping with what's going on right now. No MVPs in the league anymore. Somebody wins a Triple Crown, they don't deserve it because somebody else batted 200. That's not fair. Should South Jersey schools ban the phrase best friends? That's the WPGTalkRadio.com poll question right now up on our website. I will answer no to that, that you're allowed to have a best friend or a certain number of best friends, because we still have free will. And you have the ability to like what you like, dislike what you don't like. We'll be back.
WPGG Atlantic City, WENJ 97.3 HD3 Millville. Everything you need to know in 6 minutes starts now.
Case almost closed. I'm Dave Anthony, Fox News. Bill Cosby's retrial is coming to an end in Pennsylvania, where a second jury will try to do what the first could not, reach a verdict. Fox's Gernal Scott is live outside the court in Norristown.
Dave, after 11 days of testimony and around 25 witnesses for both sides, Bill Cosby, just about 15 minutes ago, arrived at the Montgomery County Courthouse. Wife Camille at his side to hear, along with the jury, closing arguments.